Okay, everybody. Okay, everybody. Good morning. Good morning. My name is Grant Larsen, and you are on Larsen Live. This is one of our doing a quick sound check. Okay. All right. Had to do a quick sound check. Okay, we are streaming live to YouTube off of my trading platform here, using the methodologies and techniques that we have developed over the years. We are trading the E-minis exclusively, and this is our pre-market warm-up. Okay, let's see. There's a series of things that we go through each morning to prepare ourselves for the day. And so on a regular basis, I will be going through that every day. Daily preparation so that we can more effectively trade the E-minis. All right. Thank you again for joining. This is a streaming to you live. Okay, our debut session. All right, I just keep doing sound checks to make sure everything's coming through okay. Coming through YouTube, there appears to be a 20 to 30 second delay, which I think is normal. That's typical. All right. Okay, so why don't we start taking a look at some things for the day. Things that we prepare ourselves on to get ready before the market opens. So where are we? It's Friday, February 3rd. Friday, February 3rd. And this has a potential for having a bit of chop, maybe with some strong movements to the upside overnight. Looking at the market. All right, let me start walking through what we do on a daily basis to get ready. Okay, all right, so when I get started in the morning, there's a series of things that I go through. And one of those just occurred. And that is I review Forex Factory. Look at the announcements for the day. We just had an announcement 30 minutes ago. Average hourly earning report, non-farm unemployment rate. At 8 o'clock, I'm on Mountain Standard Time. We'll have the ISM non-manufacturing PMI. Righty. Okay, hopefully I can talk. There we go. Okay, so on that announcement, the market responded to the upside. Got a small retracement from that initial volatility. Okay, so we have another announcement coming up here about an hour from now. All right, that'll be ISM non-manufacturing PMI. All right, so that's the first thing that I do in the morning. So I see what announcements I need to be aware of so that I can prepare myself for the market, when to be in, when to be out. I've made the mistake in my career of being in the market during one of those, and not a good idea. Didn't go well. Gonna learn from those lessons, of course. Okay. The next thing on our list that we go through to prepare every day is I evaluate the average true range of the market that I'm trading. So in this case, we're trading the E-minis. Now to help me do that, I have a simple algorithm. That's too strong of a word. A little simple bit of code that I run that goes and does that calculation for me. And what it does is it tells me the average range for the day. or for the most previous 5 days. Let me be more specific. I'm going to run that code right now. You won't see this happen. I'm going to run the code, get that prepared here. Okay. All right, let me run that. This is just a little bit of Python code. I'm just going to run. Okay, let's see what it is, and I'll tell you what the different markets are that I check. See what their average calculation is. Okay, here it comes up. All right, so the ES, so the readings for the day. So the ES, ATR is at 19.28. Now what I do with that is I create some range charts that are a subset of that. So I have a charting system where what you're seeing is a 1 minute chart, and I use that for some of my key indicators on movement, price movement within the regular trading hours. So there's no overnight session on that particular chart. But then I've got some other charts, some range charts, and those are across all of the trading sessions, so regular as well as overnight. And I organize those based on the current market range movement. So it's about 19 ATR right now on the on the ES. That's calculated over a 5-day range. And what I do is I basically take about half of that. So I'll do about a 9-tick range chart. So I create one chart that's a 9-tick range chart. And then I take about half again, maybe a little less, and so I have a 4-tick. So I have a 9-tick and a 4-tick range chart. And I use those for drawing out channels. So let me show you this here. Give you a brief intro to it. Keep my mouse moving over here. All right, pull this over from another monitor. Okay, here we go. Now, I use the charting on Thinkorswim, but I actually don't enter my orders through it. So in this particular case, I'm actually on the paper one, but it doesn't matter. I just want the charting. Okay. So what I've got here is I have a 9-tick range chart, and you can see I draw channels across it on the left, as well as key Fibonacci's. So I try to get a visualization of price action, irrespective of time. So tell me what the price has been doing. And you see I have a Fibonacci up here, and you can see it came off of a high and low over the last couple days, hit the 50%, and now overnight the market has pushed up pretty strong. Okay. All right, and then, so I use this one a lot for market structure. Tell me where the structure is, where's the channel, how are things moving through the channels. Again, with emphasis on price action and not on time. And then over here is the 4-tick range chart. And again, I'll put channels on this. I'll use this one more to confirm with my 1-minute chart, my timing for entries and exits. So let's go ahead, let's put a channel on here. We've got a channel coming up right like this. It'll look something like this here. And when I draw these, then I come across the top. I try to find a previous pivot point that makes sense. And maybe I'll go out to here, draw that channel. Okay. All right. And we just came across another channel right up here, almost touched it. That was the result of the announcement earlier this morning. All right. So the emphasis here is we came hard down about a week ago. We've been chopping around here for several days sideways. And now this morning, we start to bust up out of this. And we got lots of open space up here for the market to bound up into. All right, we'll see if that's in fact where it goes. All right, so that's the next thing, right? So again, to recap, look at Forex Factory. Second is take a look at our ATR and update our range charts based on current market movements over the last 5 days, because we want to be able to know what the targets and the ranges are within the most recent market volatility. All right, so then I update the channels on the range charts. Okay, the next thing here then is I take a look at the daily. So the daily is important because the way that I look at the daily is without the overnight session. Now that starts to become very helpful to me here. Let me get over here and pull that over. Okay, this is also extremely beneficial for preparing for the day. Okay, so pull over the daily chart, and in this chart here, I'm interested to know the general movement to where it is, looking for the gaps. We were really, over the last month or so, gone sideways after the election. Obviously a big push up, then a big gap, bounced around. Now we're sort of chopping sideways here. Okay, so this was yesterday. Now I use the prior day closes to help me in some of my current trading days. All right, the current trading day. All right, let me show you this here. Okay, so yesterday bounced off the 21 EMA. That's the magenta, and yeah, sitting right between 21 and the 6 EMA. Okay, so that's the next thing I do is I take a quick look at that, and I set the settlement right here. So yesterday's settlement was on 2275.75. Okay, so let's take care of that right now. 2275.75. So I get this set up. $275.75. Okay. All right, so that was the close from yesterday. All right, and of course what we're looking at here is yesterday's action. Today's market hasn't opened yet. All right, now let's go to the next item here. I take a quick look at what I call the resistance grid. The resistance grid has a set of correlated markets, both directly and inversely directly correlated markets. And I keep them on this dashboard here. And I update the lines, resistance lines, to help me see where different markets are hitting different levels of resistance. So I've got the ES here. Again, that's on a 4-tick range chart. Over here I have the Russell on a 15-tick. And so earlier when I ran our little ATR calculation program, it actually went and looked at this across all these different markets and said, here's the general range of activity. This market trades within this particular range on any given day. And then I calculate based on that, what the size of these range charts are. Then draw the resistance lines against that. All right, so we've got the NQ over here. Got TRAN. TRAN is a NASDAQ Transportation Index. We got bonds over here. And then on the bottom right, we got gold. All right, so you can see that gold was up overnight. Bonds were up overnight, so we have some misalignment there, right? Generally, those tend to go opposite directions. So one of them's going to give, right? Either bonds and the gold will start breaking, or the ES will break. But they're trading in a similar direction. So I look at the resistance grid, and then I update it. So I put new lines, fresh lines on there. All right, so I'll do that here in a moment. Okay, and then I look at a couple other things. I look at, and I won't pull those charts or these charts over, but also I just look at the dollar, see what the dollar's done. I see what the SPY's doing over the last several days. I look at the VIX. That's very important. If the VIX gets to a certain level, it changes the trading strategy. VIX last night ended, it was at 11.21. And and I already mentioned the TRAN. Okay, so with all that in mind, so we've done some work now to prepare ourselves for the trading day. I also have one other chart. You don't have too many, but have enough to give you a few different perspectives on here. I use a Heiken Ashi also to help me just see what general sort of direction is without as much of the noise of the chop going back and forth. So I'd take a quick look at that. Okay, so the morning's prepared here. Typically takes 15, 20 minutes depending on the day. I'm just going to be adding a few resistance and support lines over here on my other charts. Putting those in at the moment. There, I can pull this over so you can watch while I put those on. Okay, and updating the bonds here at another level. It's been touched multiple times. Updating gold. And the NQ. Okay, so my focus is entirely on the ES, on the E-minis. Now this kind of trading day, so yesterday it was really choppy. And so after a consolidation, even though the overall day, the day ended up to the upside, but on the intraday perspective, lots of sideways action, which quite frankly, I actually enjoy that. Many may not, but I actually find a lot of opportunity when it's trading the regression to the mean, and so it gives really great reference points to trade on something like that. Not everyone agrees, and the E-minis certainly doesn't trend that often, right? It tends to chop probably 60% of the time, maybe even a little more than that, and only trend, the minority of the time, maybe 35% or so. So you got to be able to know how to trade both styles, but taking advantage of trading between those ranges on a choppy day can be quite profitable. Not looking for home runs, but you just keep hitting base hits. All right, then you go from there. Okay, so where are we? The market's moved up overnight on the news. There's a potential, we've got bonds are staying strong. Gold's starting to pull off. Back off here a little bit as we come towards the open. Okay, we've got the federal news announcement, and what is that? About 40 minutes. Okay. Now, I also take a look at one other thing, and that is the advancers and decliner grid. So let me introduce that briefly to you and what that's comprised of. Okay. All right. So I keep a grid up like this on one of my monitors that helps me to see how the market opens each day. And so that's what this is on the left. So we got advancers minus decliners. And, there's something, when you understand when it opens at one of these extremes, 1,000 or above, or when it opens down here, 1,000 or below, it gives you another indication of how to trade the open and where the opportunities are. This is a 15-minute view of the days. So here you can tell in this particular day it opened and pushed down really hard on the open for 15 minutes and then sort of retraced the rest of the day. This is a 1-minute view. So I'm looking for understanding the alignment of price action and the advancers and decliners. This is just one of the market internals that we watch. Okay, now market's pushing up to its high, overnight high. Okay, let me get this out of the way. I'm going to save my workspace and get over to Thinkorswim Live. That's normally what I use. This morning I happened to open up my other one. I was tweaking some things and I just stayed on it. Again, I'm using the charting in Thinkorswim, but I'm not entering my positions with them. Okay. All right, so here's the one that now I want to spend a little bit of time on. This is the 1-minute chart. And this 1-minute chart here has several things on it. So let me take a moment to go over that. Give me 1 minute. Okay, I'm back. So it's about 5 minutes before the open on February 3rd. Okay. So let me talk about this 1-minute chart here. It has a couple characteristics about it that I want to point out. First, you'll notice some colored dashed lines here. We've got the magenta line. This is yesterday's settle, so I've already set that. Then we also have this blue line, which I call a volatility cycle line. Maybe find another name for it. I'll explain and show what that does. And then we have the open. All right, and so right now we are sitting close to that 86 here. So we'd be on a gap up, pretty big gap up on the day. Okay. Okay, we'll use that here in just a moment. All right, looks like we're poised for a big gap up from the close last night. I'm just going to come right up here. The open's going to be somewhere right in this area. Okay, now across the bottom, so before the market opens, let me start to introduce this indicator. I call it the real move, or the confluence real move indicator. It's an indicator that I developed. I didn't necessarily want to create another indicator. That wasn't my interest, but I created one because I found the need to pull together information from many sources and have it in one place. Now you can tell already that I've got several charts already up and going. So all that's, of course, helpful and good to have those charts. But I also found it valuable to try to synthesize some of the information to a place where I can see it aligned with the current market action where I'm trading. So I tend to have my trading environment set up where, oh, here goes the, oh, we got a couple more minutes. I have my trading environment set up where I have the charts on the sides on other monitors are for context. Then I'll have my actual sort of core chart as my 1 minute here. And I use that to look at the relationship of market internals to price action and looking for divergences. So the actual setup then, I can see the AD lines, what advancers and decliners are doing. I can see the tick charts, what's happening there. I can keep an eye on the VIX and on other correlated markets. I can see where the resistance lines and support lines are. I can see what the daily activities are. And what I do is I look for extended locations. So locations where the market is moved too far or not moved far enough, or where it's misaligned with market internals. Now, one of the keys here is to be able to track the relationship between price movement and market internals. So we're going to demonstrate that here this morning. Okay, market's about to open. Here we go. Okay, we open up here this morning. We're going to start getting our first reads. We want to see how it opens. Okay, advancers and decliners are very high. So big jump up to the upside. Okay. Gives a strong indication that we could, in fact, have some very bullish activity today, but it could also come with some initial pullback. Let's see price is starting to pull back here a little bit. Okay, so the close of our first minute is 86.5. So 86.5. So what we're going to do is we're going to go like this. We're just going to set this. We've got 86.5. So that's our open. It's the open after, it's the close of the opening minute. Okay. All right, so that sets our yellow line. Now what we're going to do is we're going to use this as a way to help us track the relationship between the market movements and the market internals. All right, and it'll help us get our bias here for the day. Okay, market looked up for the first moment, at least on the advancers and decliners are trying to push up. Price action, however, is not responded here. Price action starting to drop a little bit. Price action continuing to come down. Okay, now what we want to capture here is our tick movements. All right, so we're looking for the tick closings. Okay. And advancers and decliners started to come back down. Just taking a look over here to gold, what it's doing. Big jump up there. Okay, so we've got gold and Russell is off. Okay, slight price pullback here after the open. Advancers and decliners continue down. Waiting for our tick read here this morning. Okay, so over here on our 4-tick chart, what's happened here is, let me scoot that over so you can see. All right, so it came up, it opened at the bottom of the channel here and busted into it. Then we do the breakdown and then the hook back up. We'll see if it'll continue to respect that and turn around and follow back down for some retracement off of that. Okay, we're interested to know the relationship of the tick to our price action. Okay, here comes the tick read, which was really, really high. Started very high up there. So it's dropping significantly. What we want to track here is the relationship between, this is a multi-market tick measurement. So what it does is it allows us to understand what is going on across multiple markets, our multiple markets in confluence. And so across the bottom, these red dots are saying across multiple markets, both inversely and correlated markets, the pressure shows that the price action wants to move down. That's what the pressure shows. Now, will it respond is, of course, another thing, but we start to see the bias. This right here is where the market's trying to go. So this is the average of the tick close is what's taken place here, and it's taken into consideration multiple markets. And as we come across here, we're going to track is how it responds here as it comes down across this oscillator and what price is doing with that. All right, is price going to follow that, or is price going to go do something else? On the advancers and decliners, it opened high, big gap from yesterday, tried to push up, then pulled back down, now it's bounced up a little bit, advancers and decliners. We'll see if it's going to break up past the open here on price. Continue to have momentum across multiple markets pushing down. Low price is coming up. See if that holds. Price now starting to walk back. Price now dropping. I need to get back over to my live account. This paper account is a little slow. But again, I'm not trading through TD Ameritrade. I'm just using their charts, but I need to get back over to my live, getting the reads over there. Okay, a little bit of a stalling after the initial pushes on the market. Let's look here. Where was yesterday's open? Yesterday's open was at after the first minute. Okay. All right. We could have a target down here somewhere around 2283. All right, we've got in market internals are starting to drop here. That's the green line. Continuing pressure down with momentum across multiple markets. Those markets includes reads from the bonds and gold, the Russell, NASDAQ, and the Tran index, and others. All right, that's the confluence. Okay, here's the break. Things are really starting to push down quick now. Okay, now what we're going to do is we want to do a measurement here. We're going to do a measurement of where tick is going and where price action is going, and that will give us a bias for the day. All right, and the way that we do this is we compare the distance between the two. So I'll demonstrate that here. It takes a little bit more time for that to develop. Okay, some of the, right, we've reached the top of this oscillator range, which is typical in the morning. Generally, you know, when the AD opens way up like that, you expect it to open way out of the range of this oscillator, or when it opens way down, then of course it does the opposite. And as you'd expect, when it opens in the middle, well, then it comes somewhere here in the middle. But what I want to demonstrate is the measurement to take to tell you the kinds of entries to focus on throughout the day. Okay. Working its way down. All right. What we want to see, so to give a little finer point on this, is we want to see the relationship here between, well, first of all, we want to see this green line come all the way down into here. And we want to see it get across the 0 and somewhere down around this light gray dashed line. When it gets somewhere there or below, then what we do is we perform a measurement, and that's where we drop the blue line. We put the blue line on that, and when the blue line is on is below the yellow, then we're going to take trade opportunities to the downside. When the blue line is above the yellow, then we're going to take bullish opportunities. Okay, now you notice here on the bottom, the momentum has started to fade off. This blue dot here is indicating that that price, while price was stagnant, momentum was pushing up. So while price was stagnant, meaning price action, it wasn't moving, we've got momentum. And now the dark green comes in saying, yep, there is some momentum pushing price back up. Okay, market internals did a bounce right when it came to the top of this range on the oscillator. We had some momentum start to appear, but it didn't last throughout the 1 minute bar, so it didn't stick. All right, we'll see if we come back down here. It might end up forming a double bottom here. We'll see. Typically takes 40 to 45 minutes to build out this first picture. The first picture of saying, all right, we have confirmation that price opportunities or trading opportunities bias are in a certain direction. All right, so we're waiting for that to form. Trading, hurry up and wait, right? Okay, so we've got price starting to jump back up here. So that level here at what was that? 2283. There's some front runners. That there's a lot of bids sitting right there at 2283, and as soon as it got a tick from it, maybe two ticks from it, you could tell there's some front runners that came in and just started snapping them up much earlier on that market, and really pushed the price back up. So all those that were waiting for their targets at that point got schnookered. Okay. Oh, price really just took a big push down. It's starting to chop here. Okay. Now, if this represents a double bottom here, right, then we're going to have a delay of game, right? Meaning it'll take us a little bit before we can get our read. We need to have the internals move down to this level right here or below for us to get our read. And this read works on a daily basis. So on a daily basis, there's a read that says, take these opportunities in this particular direction. Now I'm looking at the advancers and decliners. They're still dropping, even though price is sort of hovering here. Advancers and decliners are dropping, continuing to push down. Still at 1356 area, 1358, so it's well above the 1,000 area, which is a very interesting area. So sometimes it'll go down and just touch that, and then come back up. So this kind of a day after a chop from yesterday can have a little wider moves. It can be a little more trending. Sometimes this kind of day can be quite a strong trending day, but the days after a chop like that can either exhibit a little more chop, or it's this blend of trying to create a trend but then reverting to some chop. So it started gapped really high. Don't know if it'll close that gap, but gapped high. Since the market opened, it's pulled back. All right, we've got the dollar is weakened. Dollar's weaker. The SPY still stayed relatively up. All right, here comes our market internals. All right, they're starting to drop. But what's happening here is, while they're dropping, price action is going up, and that starts to become a real telling message here. All right, we'll see what happens. We need it to get down to the other side, though. Another 20 minutes, maybe. Advancers and decliners still dropping down to 1312. Russell is dropping. So the ES is being a little more sticky. Russell's dropping. NQ is staying a little sticky. Okay. Advances and decliners are still dropping, but the market is trying to push down, but price action is not going to take it there. Here we go. We got price action going the opposite direction. That's important information. Heading back up towards the open. Market internals are still dropping. If that happens, then that's a great opportunity for a bullish setup. We'll see what happens. Okay, at the bottom of here is an indicator I like. It's called the cumulative tick. I actually got it through the shadow trader folks, and I think I've done a good job with it. Ticks are up to the upside, which actually says, hey, it's actually been more buying pressure up. And so we're getting a setup here that could be confirming that. The cumulative ticks are staying to the upside. Price action pulled back briefly, started to come back up. I also have the VWAP on here. So I use the 3 levels. Of course, the VWAP itself, then a 1, 2, and 3 standard deviation. Many times those standard deviations end up being the targets. Okay, we continue to have price stay up. Let's look here. The Tran index is pulled back from its high, hasn't responded yet up to price. TF is turned up briefly. And we've got the NQ mostly chopping sideways after the initial push up. It's chopping sideways. We've got the news announcement right now, 8 a.m. We'll wait for the effects of the news announcement. Maybe minor, we'll see. Starting to show some intermarket momentum to the bottom, to the downside. That's what these red dots are down here. It's starting to push down. Okay, big price jump up here. Come up, just touch the open. Advances and decliners are churning sideways and just starting to peak back up. Okay, looking for our market internal read here. We've got our cumulative ticks here, are saying it's to the upside. Okay, big push up. We got confluence to the upside. That's the green dot. That means multiple markets are agreeing that there's momentum to the upside. They're being responsive. The NQs are starting up. TF is starting up. Advancers and decliners are responding. They're also coming up. Market's just exploding to the upside. Okay. Cumulative tick confirmed that. We've got the big momentum push up. Small pullback here. So another 10 minutes. Hopefully we'll have our read on market bias. We need market internals to pull back, give that confirmation. Okay, we got another indicator trying to form here, multiple markets saying that there's momentum to the upside. So the way to read that is we got the TF is got momentum up. We've got NASDAQ with some momentum that's forming. Tran, however, seems to be sitting pretty still. Push here. Now with the dark green dot trying to form inside there, it's also saying that multiple trends across the different markets are also aligning as well. Tends to be one of the more slowly forming indicators. Advances and decliners are pushing up. Looking over here on the 45-minute chart also, we've got, it's trying to break across this, there's a trend line coming across, a support and resistance line really I should say. It's trying to see if it can break above that. If it breaks above that, then this thing will continue north for quite a while. Otherwise, we might double top right here on the market internals, so keep an eye on that. Okay, double top looking like it's going to form. Watching the channel development on the right on my 4-tick range chart. We've broken out of the channel on the 9-tick range chart. And on the 4-tick range chart, we actually broke the channel to the side, which means it could continue to just chop sideways here for just a little bit. Comes another push. Some more momentum entering the market. Cumulative ticks are still growing up. We have a little bit of push the other direction trying to form. Let's see if we get one more push here. Okay, again, this light blue dot's just saying that market internals were trying to keep pushing up even though price wasn't moving. However, that went away because price did respond and started to drop off. I'm going to fix this line here. We've got some confluence on momentum across multiple markets to the downside. Price starts to respond and pulls off. Here comes our market internals. We're dropping. Okay, price now really responding. It's pulling off of the highs there of the day. All right, we need to get our read here on the market. Still waiting to get the measurement that we're hoping for. If it doesn't develop in the first 45 minutes, then typically it can take another 30 minutes or so for that to form. Advancers and decliners are still pushing up. Internals came back and touched that trend line there, right down. Here we go, right down here. Touch that. Let's see if it responds to it and gives us another push back up. Over here on the 4 tick range chart, so we've got some channels. So what, over the last couple days? Yeah, since yesterday, there's a sharp channel coming up. Then this morning, it came across and busted out of that steep channel. So it did the hook down, and now it's pushed back up. See if it responds to another potential target area. Could be here across the middle of this other channel. Gets up to the 2289 area, which it actually came very close to that. A little bit above that. Okay, so it's broke out of that channel. I'm trying to form a new channel here. Okay, advancers and decliners continue to rise. Came back for the first half hour. Now they've been just going north. See if price action responds. We have quite a bit of confluence here to the bottom side here. So looks like market internal is going to fall over here. Maybe not. Okay. Only the market knows. Or does it? ES is starting to rise. NQ is rising. But we've also got bonds and gold are rising too. Someone's going to break. Dollar continues to get weaker. Same with the major USD pairs on Forex. Forex are getting weaker. Got, here we go. Here's another push. Got some momentum indicators across multiple markets. Price trying to keep pushing up higher. It's not breaking. Oh, now it's starting to break. 2289. Oh, it's got one more push in it. There you go, another push. Okay. All right. So some strong momentum there. Push through a set of stops, forming a new high here on the day. Just touched that the high 2289.25, and it just pierced the middle of that channel right here. We just talked about it a minute ago. So it did respond to that, came through and hit the top of that channel here on the 4-tick range chart. Okay, we're still looking for symmetry. We're looking for a read. We've got cumulative tick to the upside, strong pullback now. Really strong pullback. Price action dropping quickly. We've got some confluence to the downside. Some momentum confluence to the downside. I come back and resolve to one of these reference areas here. Either back to the open or back to the 34. Still looking for the read here on the market. Now, I keep saying that. What I'm saying is we like to get a read from the market open when the internals are up like this to when it comes across to the other side down in this range. And we compare the relationship of market internal movements to price action. And then that gives us some bias on the day. All right, so we've had a strong open here for the first 45 minutes or so to the upside. We're looking for our initial indication. Then we can start scaling. So far I've been trading onesie, twosie lots as we've had momentum pushes with confluence, been taking just short wins, not short, quick wins, small wins, using those momentum indicators with the market internals. But I really like to have much more knowledge here in terms of the relationship between price and the ticks. Now, interestingly, if you look back across the day so far, a lot more momentum has been pushing to the downside, and yet price action would not necessarily reflect that. Certainly at the beginning of the day, the price action was reflecting the momentum pushes, but on since for the last 20 minutes or so, price has definitely been moving up despite multiple market momentum pushes to the downside. Price action wins. Price action always wins, but understanding what the intent and what the market's trying to do, want to trade that. Okay. Now here we've got market internals still pushing up, but price action is going down. So that's telling. All right, let's see if that holds. Price action dropping, momentum staying up. Not momentum, excuse me, market internals, which is a combination of things, right? It's those stocks that are trading on the uptick minus those trading on the downtick, as well as advancers and decliners. So we're actually at a new high on advancers and decliners here. 1728. Well, let's see, yeah. But no, it went higher on the first. No, it actually went higher earlier, but it is gone quite high here, pushing up. Okay, I'm about at the end of my trading session for today. Price high for today. All right, it just broke above the top of the channel. Yep, just broke above the top of the channel on the 4 tick. Hit 22.90. All right, this is when you think that the algos are in charge, because this sort of slow grinding type of move. Okay, and they're gonna make me wait to get my market read. It does come, but this is one of those two-step days. You can tell it's a two-step day where it gets through two 45-minute cycles here. So it's broken above on the 45-minute chart. It's broken above the opening resistance line that it hit, retraced, then came back, worked on it, and now is pushed successfully above that. Okay. All right. Well, market internals definitely pushing up, way up high here. Now, this other information on here, I typically hide it. It's not that it's secret or anything like that, but it's just there's a lot of information on there. This is showing the momentum pushes across different markets, and the ones that are yellow are directly correlated markets, and the ones that are, was that violet, I guess, purplish, those are inversely correlated. So that means that, you know, they of course would be moving in the opposite direction, but when we get that kind of confluence, then like you can see right here where the green dot showed up, that's where we got a lot of markets that are agreeing with that push up. Obviously different markets push at different times. When they start coming together and you start seeing, okay, like right here, obviously big pushes there. But I typically hide that just because it's too much noise, and I don't have to actually see it or know it, because I have it synthesized and pulled into these dots here. Okay, so we're coming along. Where are we? We are almost 1 hour into the trading day, and looks like I will need to step away here in a moment. Okay. All right, everybody. Thank you for joining Larsen Live. We got a slow grind up. The algos are keeping it up there. It's confirming though, because you know when the AD opens this high, the advanced decliners open this high, well above 1,000, then that gives indication of strong bullish. We've not yet had the internals pull back, so it's that strong of a bullish day that didn't even get all the way back for the confirmation, which is not typical. Typically, the internals will come back and take a quick breath, give you that read, and then up it goes. But here we've got more highs now for the day, still coming up. And it's going to come up, I'm sure, and touch the top, at least the top of this channel here. Where is that? That's about 22.92. In fact, it's almost there. 22.92 and a tick or two above it. There you go. So just hit some highs for the day there. There you go. I took a trade there off that because we are getting the double top right here. Getting the double top right there. Okay. All right. You guys have a great trading day. look forward to meeting with you again tomorrow. Actually, it's Friday. I'll meet with you later then on Monday. Have a great weekend.